The market had absolutely crazy strength today. We felt the enormous buying pressure that basically all morning. Primarily, we kept on leaning long. We made money today. So in today's video, we're going to go over the SPY, the NASDAQ, IWM. We're going to talk about the dollar, and then we're going to take a look at the 30-year bond. All right, so let's get started with the video. Number one, if you had just kept going long using 370 and 371 as a level, you were rewarded handsomely. So 371.04, major level of support. And then also, so not only did we get a close above 371, we got a solid, strong close above this trend line, which was the falling wedge breakout trend line, right? And then we were looking at it, it was acting as resistance. Now we finally closed above it. So they are making a very, so they made a very bearish candle here, and then they ripped it to the upside. So essentially now the main level of resistance is going to be 380.54. Until we break above that level, then we have to just assume that the best situation for bulls would be a retest of 375 to 374 and then a break higher. But even if we were to break and retest all the way back down to 370, this would still be a healthy level for a retest and continuation to the upside. But the issue is that we are still in a bear market. But another very interesting thing that I want to share was that we bounced off of the 10 simple moving average. So the 10 simple moving average alongside this 368 level really held support very well. And now, once again, because we're within this range, because we had this huge green move already, you're going to want to wait to go long until we get retests of support, or basically use 380.54 as a level similar to 371.04. So basically we would wait until we get a close above 380.54 for going long, or a retest back down to these levels of support for going long as well. But yeah, that's essentially it. We saw a lot of strength coming out of the IWM today. But the interesting thing is that we basically stopped right at the 20 exponential moving average. So it's going to be very interesting to see if we can basically break above the prior levels of resistance on the IWM. But we clearly saw the IWM was the biggest winner today, right? But now when you look at the IWM in terms of distance away from the 20 exponential moving average, you could take a look at the SPY, and you could see that the SPY is further away from the 20 exponential moving average than the IWM is. Obviously, there's more room to the upside for the SPY, and that is almost coinciding with the 380.54 level. But then when you take a look at the NASDAQ, it is also far away from the 20 exponential, but it coincides perfectly with the 50% fib level from the March 2020 lows. So this is going to be a very major level of resistance on the NASDAQ, and it's going to be very interesting to see if we can follow the strength out of the... First of all, we need to see if the IWM can continue showing strength, because it's currently the biggest leader. If it can continue breaking above its 20 exponential moving average and continuing to close above 177, 178, then that would give a lot more room for the NASDAQ to potentially catch up, and that would be very interesting for the market and bulls. But then how much more room to the upside would there be? All right, if you were to start going long as these levels of resistance breaks, when you're looking at it in terms of the SPY, right? Say for example, you want to start going long after it breaks 380 or 383, your upside would only be about 390 to 400, right? That area. Where would you essentially, you would basically be in the like 50% area if you were to take a fib level from the major levels of resistance down to the bottoms. You would be at like the 50% area. You would be in sort of no man's land. You would try to go long, but the upside potential isn't as lucrative because there's also a lot of downside potential. So it becomes difficult to try to trade while you're in the middle of price action. It's much easier to take trades when you're at extremes. So at the moment, we just have to take it one level at a time. We could make predictions based off of longer term horizons, but definitely as it continues moving upwards, if the macro environment continues remaining the same, then it makes sense to basically scale into shorts even more as it continues going higher. So specifically as it starts breaking above 380 to 383. So yeah, that is going to be interesting. So that's basically my entire theory for the equities market. Now let's go ahead and take a look at the dollar and the 30-year bonds. So the dollar was obviously tanking today, which is one of the indicators we used to see the strength in the stock market, right? So this still has more room to go to this trend line here at 108. And that essentially, if we were to fall down to 108, that doesn't give that much room to the SPY potentially, right? So if the dollar ends up consolidating at that level of support and then bouncing, that would be the equivalent of the SPY failing at 384 to 385 and then falling back down. So, it starts becoming a bit more difficult as we get there, but it's all going to depend on if the dollar can hold this uptrend. So far, it makes sense to have a bit of a correction because we did have a lot of strength recently. So from a technical standpoint, this is a good opportunity to basically see what happens. But a lot of this also has to do with the Europe situation as well as the Bank of England and what's going on with the euro. So the dollar isn't going to be, it's going to be interesting to see what goes on with the dollar moving forward. But basically, if there's continued weakness out of the dollar and this trend line doesn't hold, then we can completely just continue to churn through the dollar here and continue falling lower, and that might end up breaking the SPY up to like 400 to 390 to 395. That would be very, very interesting. But there's a lot to take into consideration, but we're going to take it one step at a time. Anyway, immediately we have the 30-year bonds, right? So obviously the 30-year bonds did not have as big of a green day today compared to what the equities price showed, right? So that isn't the best sign. We wanted to see continued strength out of the 30-year bonds and breaking above this level of resistance. The fact that we're stagnating like this is not something that we want to see on the bonds. And this is not a bullish situation on the bonds, right? Obviously, the way that the equities prices were moving, it looked like we already broke above resistance, but we're showing stagnation. So that's something to take into consideration. And once we break back above 130, then we can be more comfortably long equities, because then we would see a justifiable bullish move out of the 30-year bonds. But until then, this move out of the equities isn't really justified in terms of the upward price from the bonds. Even the bounce that we see out of the bonds is just we were very overextended to the downside, and we worked off of the MACD oversold condition pretty poorly, right? We didn't break above any levels of resistance. So now this MACD needs to continue going higher and higher and needs to become very overextended for this slower MACD line to start moving upwards and average out upwards to bring the entire momentum of the 30-year bonds upwards as well. That is going to take a lot of strength out of the 30-year bonds. But basically what we want to see this line do is similar to what we're seeing this yellow line do on the RSI's moving average. But currently, that's my take for the market. We can't really it's tough to say what's going to happen, especially if we continue going up higher. Then it's going to be even harder to judge which direction everything is going. But the easiest thing to do is just continue to see and monitor the dollar and continue to monitor the bonds. That's very, very simple. If the dollar is red, then most likely if the dollar is starting to show a lot of weakness intraday, like it's starting to really break levels of support and show a lot of weakness, but the equities are still holding support and making highs, then we should start shorting those highs on the SPY and the equities market and everything, because that strength is not going to last, because the dollar is good indicator of how the equities prices should be, and also taking into account the bonds, right? So, but yeah, if you guys enjoyed today's video, make sure to like, comment, subscribe, do all that good stuff. If you guys are interested in the live streams and everything like that, make sure you guys tune in. I go live every day from 9:30 a.m. Eastern to at least 11:30 a.m. on YouTube, Twitch, TikTok, all these other social media platforms. Definitely take a look at that. And yeah, thanks for tuning in. I'll see you guys tomorrow.